Yeah, welcome back. Welcome back, and let's proceed. So we're down here for a tape reading session. So of course, we did the analysis in London. We said the market was going to come back down to our levels down here, and entry was around here. Okay, so you should be triggered already and running into profits. I'm also in this trade, so keep on holding. In like how many minutes? Um, half an hour, we will have some news, the dollar news, and it should push us higher and higher. Okay. All right. So down to our discount level. So again, we're utilizing the HLC model. Open below the opening price. That's the low of the day. So, and we got this market structure shift, our low, our high, lowest low, shift in market structure right here. So we have a shift in market structure. Right. So shift in market structure is right here. And what has facilitated this rally from here is this the breaker, the bullish breaker block right here. So we have a breaker block right there. So you can see the market is just hit that high end, the closing price of this breaker block, and we are running higher. Okay. Right. So market structure shift, breaker block. Let's use a different color for this. Let's use green will do. So this is a breaker. A breakup is a fair value gap, a very strong entry pattern. We call it the unicorn. Remember the unicorn? Yes, the unicorn. Very, very strong. This can push us really high, okay? So bullish breaker. So this bullish breaker block, this one. And also it was below 830. It's where we got that return to a PDRA. That was this daily inversion, this black zone. It's the daily inversion. And yeah, got that market structure shift right here, leaving a breaker block. Later on, I've gotten another entry at this breaker block right here. I've gotten another entry. So, and we also have a fair value gap. So we have a breaker block, and a fair value gap. That's the unicorn. Okay. Yeah, everything has happened below there. 830 open. Okay. So the fair value gap is between this candle and this next one. This is that fair value gap. So it's time, then price, okay? So first element, time, then price. So time, 830, you opened, dropped, create that low of that session into the daily inversion fair value gap, rallied, market structure shift. So your entry was around the opening of this inversion fair value gap, stop loss below this level, the blue level, chose order block, a node order block, bullish order block. So below there, that's where we have the stop loss, and then we can rally now. Okay, so open, drop into our PDRA, the daily inversion fair value gap, rally, market structure shift right there, leaving a breaker block. So this is a breaker block and a fair value gap between this candle and these are the entry. So a breaker block plus a fair value gap, we call it a unicorn. It's a high probability entry signature in price, okay? And we got that institutional order flow entry, just partial entry into this. And why? Because we have a breaker. We have used the high end of this breaker block, okay? Now you can move your stop loss from below here. Now you can put it up here, okay? How this zone, actually at our entry, because our entry was right here. So you can put the stop loss below this breaker right there. And price, I can assure you it's not coming down there, okay? All right, from down here, another entry was here. This institutional order flow entry drill. I got another entry right here. We broke above this CB, the fair value gap. It was created after news release, the European Central Bank interest rates right here. So we have broken above this. Now this fair value gap is no longer a CB, it's an inversion fair value gap. Let's just call it inversion. Inversion. So what it is, it's a strong support, okay? It's a very, very strong support. If the market can come back down here, it should support price and push us higher. So inside this inversion, so again, we are in the New York Q zone. That's from 7 to 10, okay? So it's time, then price, okay? All right, talking of this inversion, this one is a very, very strong support, okay? Price should not break below here. So next we have a fair value gap inside that inversion between this candle and this next one down here. Yes, right there. So this is another fair value gap plus inversion, okay? So first entry on this daily inversion, it was pending orders, rally, market structure shift. We left a breaker block plus a fair value gap. Institutional order flow, institutional order flow entry drill, another entry, okay? Another entry right here. I got this entry. And we can have another entry inside this inversion. So we have inversion fair value gap, this one, plus the fair value gap. So if price can come back down here, another entry in pre, okay? So yeah, and now we are almost through with the that row of the day week. We are entering the body, which is above, the opening price, okay? I don't remember where I drew it, but let's just proceed, okay? So using the 5 minutes, this is the time frame I love for these entries, okay? All right, so we are pushing higher. First target, the dealing range high, this dealing range high, that's external liquidity, plus next previous week high up here, okay? So yeah. So, and I'm also waiting for some news from 5 Kenyan time to be to be 10 New York local time right here. So it's a dollar news, and they should give us a rally upwards. Okay, rally upwards. Right. So currently I'm concentrating happier for my first target. And when we get here, I'm getting 70% of my trades off happier. Okay, 70% happier. So also be ready to get your trades, 70% of your trades happier. And next, happier. External range liquidity. That was a previous week high. Okay, previous week high. Right. Now we have breached above the opening price. We can keep pushing and keep pushing. So do you see the hierarchy of PDRAs? Okay. Return to a daily inversion fair value gap, the inversion level, the black zone, first entry, the opening price of this inversion. Okay. Then market structure shift. We rallied. This is the displacement. Market structure shift right here. Immediately broke above the swing high to the market structure shift. And what time precisely? 8:30. So 8:30. You want to focus here daily. Each day focus here. Okay. Market structure shift. We left a breaker block and a fair value gap between this candle and this next fair value gap. So a breaker plus a fair value gap, very strong price action entry signature. We call it the unicorn. Okay. I got another entry. So your entries are down here. So if we didn't set pending orders, we would have used this as the next entry. Rallied, we got a speed bump. This fair value gap, it was a fair value gap until we broke above it. So breaking above it makes it inversion. Okay. So inversion, now this is a strong support. Okay. So what do we have in this inversion? Fair value gap. And we are rallying. So in case price comes back, this is the next level of entry. Okay. If we keep pushing higher, then we are really bullish and we are aiming for these premium arrays, the external range buy side liquidity of that major structure dealing range high. So this is the dealing range high for that 4 hour structure. So previous high. So dealing range high. Above here, you have buy side liquidity, which is our major target. Okay. So our major target is up here. But 70% of your trades, they come off here. 100% up here. This should be around how many pips? Let me check. From our entry to that high, this should be around, let me check the pips. All right. From our entry down here, I should be around 70 pips. Is it 70? Let me check again. No, it's 63 pips. Should be around 63 pips. Okay. So it's good. It's good pips. Yeah. All right. So again, this candle, you see this candle, this is a bullish order block. So here we have three PD arrays. We have inversion, a value gap, we have a fair value gap itself, then a bullish order block. So this is a bullish order block. So right there, price can really explode higher. So there's a bullish order block, there's a fair value gap high, fair value gap low. And this is an inversion of fair value gap, okay? So yeah, ready to roll, ready to roll up higher. So if we revisit this, remember inversion are very, very strong support. All right, so support zone. Then a value gap, another support, then a bullish order block. Use this as a ladder, also a strong support level, okay? So we have three PD arrays. We have three PD arrays right here. The inversion fair value gap, the fair value gap, bullish order block. Tap into that, rally, okay? So watch. Excuse me. I would love a revisit to this because this will give us a parabolic rally, yeah? A huge rally of here, okay? Big rally, yeah. So let's see, if we get a revisit to this, then a rally. This is our current dealing range between this high low, the institution order flow entry drill, down here to high here. So let's see. Equilibrium, yeah, 62% OTE. I would love a revisit to this, then a rally. So let's see how we trade into this. Let's see how we trade into this. So I'd love a retracement to this. Otherwise, the news might come out and we rally parabolically up. So the news come out in around, all right, how many minutes? 17 minutes. So in around 17 minutes, we'll get some huge rallies of here, okay? So keep watching. And usually please go back to these recordings, yeah? The London session, we analyzed this market and we had our buys, we had a buy setup, right? Now in New York, we had that entry, we had our entries down here. This upper end of this inversion fair value gap, the daily, this black zone, right? Then we have market structure shift, breaker block, fair value gap, unicorn, timing at 8:30, create that low. So entry at 8:30, okay? Then rally, institution order flow entry drill, another rally. We broke above this fair value gap, making it an inversion level, very strong support. we left a fair value gap inside that inversion, then plus a bullish order block. Okay. Now let's keep on watching and see what the news will bring. Okay. Otherwise, it's for the target, external range. The dealing range high, which is external liquidity, previous week high, another external liquidity. Okay. Yeah, so this is how we do it. So by now I know most of you are already good at this, but it's good to keep doing the live sessions until everybody is good, because I know it's like 60% or let's say 70% who are okay, but 40% are still somehow struggling. But as I promised, I'll deliver. Okay, I'll make you consistent and profitable. Okay, so yeah, for the whole year, yeah, if we want, we can be doing this. I actually love doing these tip reading sessions. Okay, so yeah, until you're good, confident on your own, we will keep on doing this. Right, so I'm watching to see if we will get a revisit to this. It should, then an expansion. So this is what we call an OTE, optimal trade entry. In this dealing range of this institution order flow entry drill, this high. So we broke up here. So around 62% OTE, another entry. Then we can push higher. Okay. Yeah, so let's keep on watching. Let's keep on watching. Right. So the first element, time, then price. Okay. So today in our analysis and execution, what have we used for our system? All right, first element, time. We said we are going to execute a New York session after the European Central Bank interest rates were released, and which was this drop to our discount level. So we expected the market to come down here, then rally. So we got an entry. So first element, time. Second element, the market structure. Always, market structure is the king. That element, liquidity. Fourth element, PDRA matrix, because we got that premium, equilibrium, discount. We had our discount levels, and in our discount levels down here, this is where we got the entries, right? So what else have we used for our system? Risk management. Risk management. So we got an entry, got our stop loss, and our targets up there. Then the PDRAs. Oh, finally, the OHLC model. We want to buy below the opening price, which is this midnight opening price. Click shift, make it straight. So midnight opening price below, it's where we get the low of the day. So at the low of the day, Down here is where we got our entries at that daily candle wick. The daily candle wick is where we got our entries. Now we're rallying. So above opening price, we will be creating the body of that candle. So the sixth element in our system today is our day trading model. And since we are day traders, OHLC or AMD, accumulation, manipulation, distribution, or the power of three. Okay, open, dropped, create the low of the day, then rally. So we opened right here at midnight New York local time. So we dropped in London. We have been, London has been up and down, up and down. So actually the low of the day today has been created in New York, right here, okay? The New York Q zone, okay? The New York session. New York session. So the next time we do after the New York session, it's from 10 to 11. 10 to 11, which we call silver bullet, the silver bullet time we do. All right, so a breach above opening price, a breach above the opening price, I don't expect that market to come down here, okay? So we breach and close above this midnight opening price. Now we will be creating the body of that candle, and I don't expect these levels to be revisited. So the news come out in around 9 minutes. And those news will be in silver bullet because it's 10 to 11. So silver bullet right here. And we will get that derivative higher, okay? Yeah, so let's keep on watching. And as I've said, 70% of my trades come off here. So entry, the daily inversion of your value gap down here. Stop loss below the blue level, choose an order, bullish order block right here. So entry right here, stop loss below this, and then first target the dealing range high, which is also previous day high, okay? Because this is yesterday's high right here. Yesterday was on Wednesday, yes, at 12. So Wednesday 6th March 2024 at 12. So this is London close, okay? So the London close, we didn't rally higher, just consolidated into today. So first target previous day high, which is also our dealing range high, okay? Because our dealing range is from the dealing range low down here, dealing range high. So we are running to this buy side, previous day high, dealing range high, external liquidity. Above there, we are going for this previous week high, which is also buy side liquidity, okay? Yeah. And a close above this midnight opening price, don't expect these discount levels to be revisited, okay? Yeah, so 70% off here, okay? up here. Right. I'll keep on rallying. So now if we hit this, I'm taking 70% of my trades off. Okay. But here 70% of my trades off. So this way I take 70% of my trades off. And then I'll be looking at this fair value gap for a silver bullet right there. So close 70%. Let me do the same. Right, I'm closing 70% of my trades off right now. Done. So also close 70% of your trades up here, because we have hit that previous day high up here, which is buy side liquidity. So previous day high, buy side liquidity. Also remember, we failed short of this fair value gap, sell side liquidity, but our entry, this is why I told you to put your entry on this the inversion fair value gap high and stop loss below the previous order block opening price. So right here. So entry here, stop loss here. Because sometimes liquidity will be left because the higher time frame PDRs are stronger than lower time frame PDRs. See, this liquidity was from yesterday, so it's not as significant as daily inversion level. Plus, it happened at 7:55. It's not important. You want liquidity from 9:30 to 12, or in London, which is from 2 a.m. to 9:30. Sorry, to 5 a.m. At 2 a.m. to 5 a.m. This was at 7 to 8. The only significant liquidity was this one. Why? It was formed at 10 New York local time, 10 a.m., right? So 9:30 to 12, this is the only significant liquidity. Okay. So yeah, we swept sell side. This was the significant liquidity up here. Okay. This one. I was only cautious because this level was around this inversion level. But yeah, we swept the side. Remember, I said we trade time-based liquidity. So 7, this is not a significant liquidity. And 30 to 12, that is it. So right here, it's 10. So this was the only significant liquidity. So we did sweep into this inversion level, then a rally. So that we don't have much levels, I'll take it back there. So currently we have this low and this low. This is engineered liquidity, relative equal lows. Now this liquidity is significant. Why? It has been formed at 9. Still not, but relative equal lows, sells a liquidity. So that's engineered liquidity to be revisited later, probably another day. Okay. So for now, immediately we get a market structure shift, we start engaging. Okay. So, but stop loss factored in a sweep below this sell side liquidity. Okay. In case we swept, This was the last line of defense, the bullish order block, and that's why our stop loss was just below here. Yeah, but entry right here, stop loss right here. Now we can rally. So I have closed 70% of my trades. You should also, okay? Now, we have news currently released, okay? So silver bullet now. So we're into silver bullet. I'm watching this fair value gap. Watching this fair value gap. This one, in this candle, this one, fair value gap. We have swept yesterday's high by side liquidity. Yesterday's high by side liquidity. It's also our dealing range high. So swept and 70% close. So currently you should be having 30% of your trades on, okay? 30%. So I'm watching this fair value gap now, and I would expect it to give us more buys to the final level, our final level up here, the external buy side liquidity previous week high. We get the final 30%, and we will get our 100% profits taken. So entry, stop loss below there, first target 70%, second target 100% profit taking. All right, so I'm watching this fair value gap. I'm watching this fair value gap. So again, I would now require you to shift your stop loss, because we trade it from down here, right? Put it down here, okay? Now I want you to trade it from down here. I want you to trade it from down here to below this inversion. Do you see this inversion? Put your stop loss below this inversion, okay? This is how you trade your stop loss logically, okay? See, this is a strong support. You have the inversion, you have the fair value gap, and we also have the bullish order block. A very, very strong support. So put your stop loss just below the inversion right here, okay? And let the 30% run to our final target, which is up here, okay? Let the 30% run to up here. Again, if we don't visit this gap, then we are really, really, really bullish. And this is the major target. Our major objective is up here. So we have swept liquidity above our dealing range, which is yesterday's high, also the dealing range high. So external buy side liquidity. Now targeting the next external buy side liquidity, previous week high, okay? I love this being perfect. Right there, right there. All right, so next target up here. But this should be our launching level. I would expect something like a drop into this, then rally. So we're in silver bullet, which is from that's from 10 to 11 New York local time. Okay, always New York local time. UTC -5 New York local time. Right, so I'm favoring a drop into this before another rally. But if it doesn't happen, then we are really, really bullish. Yeah, and you should not worry, because we've got our entries down here. 70% of our profits taken already. Now targeting the next level, which is a previous week high, external buy side liquidity. This is our final target, and we call it a day. Right. So yeah, this is the silver bullet time we do. So our silver bullet from 10 to 11 New York local time. Okay. So I'm watching this as a drop into this, then rally. Okay. Especially that we have swept by side liquidity up here. I would expect a small retracement, then rally. But 70% of your trade of your profits taken, we have trailed our stop loss from below here to below this inversion. So you should have by now your profits should be locked. Yeah, it's called profit locking. So you have locked your profits with some pips in profit because the entry is down here. The entry is down here. So up to here, so we have locked some profits right here. So we have locked some profits right here. So profits locked, and we don't have a worry. So even if the market can decide to drop all the way down, we will be stopped at a profit. And plus, we don't worry because we took the big share of the profits up here, which is 70%. So 70% of here, we have locked our profits. So we are good. We are good. So next level is up here. And I would expect a drop into this, then a rally. We don't, then we are really, really bullish. And yeah, this is the next objective up here. So remember, the next time we do after new Q zone, the silver bullet. So the silver bullet, we also over a setup, which is about to happen right here. This fair value gap and plus these down cross candles, 1, 2, it's the bullish order block. So also bullish order block right there, plus the fair value gap. Then keep rallying higher, okay, up to there. All right, so currently we are digging into this fair value gap. So I would expect a drop up to like the middle point of this, just the whole gap filled, but I would not expect a drop below the opening price. You see this opening price right there. Would not expect a drop below the opening price. Okay. Yeah. So don't expect a drop below the opening price. Yeah. Yeah. So if it did, this would be an indecisive day where we had open, dropped, clear the low of the day, rally, swept by side, then inside that, so below the opening price, inside that range between here and here, between entry at the low of the day and exit at external range liquidity, the dealing range high. So that day would be like indecisive day. Okay, if we can drop below the opening price, that would be an indecisive day, which would be probable or consider it remembering that tomorrow we have NFP. Okay, so actually we are trading under the enemy zone. Why? Because tomorrow is NFP. NFP ahead of NFP, a day like today should not trade. But we had our setup. Why should we not trade? Okay, but that's against the market environment. Okay, yeah, that's against the market environment. So because a day before NFP, it's usually a messy day. Okay, usually a messy day. But we got our setup, we got our entry, we got our 70% of the profits off. Yeah, now remaining with 30%, and that 30% has been locked into profits. Yeah, so considerably, we have nothing to worry about. Right, so I would expect a deeper dive into this fair value gap, the silver bullet. Otherwise, it can also be an institution order flow entry deal, but I would expect a drop into trace middle point of this. But I would not expect a drop below the opening price. Okay, below the opening price is a no-no. Right. So again, I'm watching this candle. We break above this candle, this becomes a bullish order block. If we break above this candle, okay. But let's keep on watching. Let's keep on watching. Right, so I'm watching this candle and also the current forming candle. So if we can get a rally above this candle will be a bullish order block. It can be used for a rally to here. Okay. So, and that would mean that this was another institution order flow entry drill, just a partial entry into a fair value gap. Okay. But should never come below the midnight opening price, because currently we are forming the body of that daily candle. So don't expect a return below the opening price. Okay, below the opening price, it's a no. So we keep forming now the body up until the previous week high, which is our external buy side liquidity up here. All right, so this has closed above the middle point of this candle. So I'm watching the next candle. If we will expand higher, close above this candle. If we close above this candle, now this will be a bullish order block, this candle, okay? Yeah, to be our change in state of delivery, bullish order block, this candle. So it might take some time before we reach up here. Because in this time we don't have any more news left. So it should be a soft bias. We can rally slowly, heading up here. There's the main target and 100% off, and we call it a day. Entry, first stop loss below here. After market structure shift and breaking this value gap, making it an inversion, we trail our stop loss to down here. Actually, we would have traded it to below this gap. Yeah, so below this gap. After we breach above the midnight opening price and getting our 70% off, we trailed our stop loss below here. So now we have locked our remaining 30% into profits because the entry is down here. So we have locked our profits into profits, then we can rally. So, and if we break above this candle, then you can also trail further from down here to up here, from down here to up here. That's how you trade. You day trade logically and methodically. Or how do we call it? Methodically, logically. Yeah, that's how you day trade methodically or logically. That's how you place your stop loss. How you trail your stop loss logically. Yeah. So 30% locked into profits. You can also trail it from below the inversion to right here. This fair value gap should act as your protection, okay? It should be your guard, this one. Because I also don't expect price to drop below the opening price. So right here, you can trail your stop loss to right here. And put a TP up here for that 100% profit taking, okay? Yeah. So, so I'm watching this candle. If we break above it, bullish order block. So this candle, yeah. So I'm watching this candle to see if we will break above this candle, which is also area of buy side liquidity because we've just swept the dealing range high, which is also yesterday's high. So external buy side liquidity. Yeah, right here. But let's see. So what time we do this one? Silver bullet. So actually put your stop loss below here. Okay. Below this swing low, this candle, and this candle right here. Swing low. Okay. Yeah. Put your stop loss down here. Trust the fair value gap and the midnight opening price. Such that if we can come below there, it's good if we got stopped off that 30%. So put a stop loss right here. So I'm watching to see if we will come into this middle point of this gap, or we'll just rally from here. So yeah, it's like we're digging deeper into this fair value gap. So last line of defense is this opening price, swing low, top loss below there to lock that final 30%. So yeah, it's a slow day. It's a slow day. So you will have to be patient. And this is how they say trading is boring. Because you will have to be patient, and plus you do the same thing each and every day. It's boring, yeah, but highly rewarding. And I also love it, yeah, because it feels amazing to me. So I really love it. Yeah. So I'm watching to see if we will come back to this middle point of this gap, or we will break above this candle. If we break above this candle, then this candle is the bullish order block, should give us a rally to our final target up here. So why are we consolidating up here? Why do we have a pause right here? Where's the candle down, candle up, candle down, candle up? It's consolidation. Why? Because we have swept buy side liquidity, the dealing range high, the previous day high. So it's just a pause before a continuation, either a pause before a continuation or a pause before a reversal. In this scenario, expect a pause before continuation. And this fair value gap is our strong support to give us that continuation. It's right here. And so I'm seeing this candle as a potential bullish order block. So if we can close above it, it's a bullish order block. If we close above it. So, and this is why you take your profits at logical levels, yeah? So we have taken our 70% up here. So we don't have worry whatsoever. And we have traded our remaining 30% down here, okay? So we don't have worry whatsoever. So at logical level of buy side liquidity or opposing PDR raise, we take partials. So 70% taken, and we don't care what happens off here now, okay? 20% taken, 30% locked into profits, and we don't, we have no worries, okay? We have no worries. So after we hit our objectives, expect something like this, consolidation, either before a reversal or before a continuation. In this scenario, expect continuation to our major objective, the previous week high, okay, right here. This is our strong support and should give us that continuation. Otherwise, a drop below the middle point, I mean the opening price of this, okay, a drop below the midnight opening price, we get stopped down here. We are good, we are good. Don't care whatsoever. So, and I said we are trading under the enemy zone. Why? Because it's a day before NFP. So usually every Thursday before NFP, it's usually a tricky day. Yeah, price action is not as clean and precise as we would expect under the normal days. Okay, so yeah, but we got what we got. Got 60%. I mean 60 pips, 70% off taken. So we're good. We're good. So a small pause in price consolidation. Okay, consolidation. So we will focus from here to here. If we don't get a delivery from in this time window between 10, 11, then we can close the trades altogether and call it a day. Okay. So currently remaining 30 minutes. So if we don't get because 10:31. So if we don't get a delivery to here between now and 11, then we close our trades all together and call it a day, a profitable day, because we made 70% off, 30% locked. Now, whatever happens, we don't care from here. Okay. All right, so I'm watching this candle. So if we close above, actually, let me see, have closed above. Okay, so what is this candles? High, it's at read here. So read here. This candle high, it's at 1.09173. This candle's high is at 1.09180. So 7380. So 73. So this is 80. So actually this is an order block already. Now this is an order block, okay? So bullish order block confirmed. Yes, this candle is the opening price has been broken up here. So this is a bullish order block. And now I would expect now a rally to here, the external previous week high, external buy side liquidity. Yeah, I would expect an expansion from here, from this bullish order block. Then what am I doing? Right there. Yeah, the bullish order block. Immediately this candle broke above this candle. This one becomes a bullish order block. Yeah, so bullish order block can be retraded into, then expand higher. So on lower time frame, like 1 minute something, can expect that we had a revisit to this. But yeah, these are bullish order block. And that's how we form PD arrays real time, okay? Yeah. Order block, change in a state of delivery, a drop to rally, right there. Immediately this candle broke above the opening price. This is the bullish order block, confirmed. Now, our target, it's on the way to be achieved. So our main objective, previous week high, buy side liquidity about to be hit. Okay. Yeah, so watch. So what I'm teaching you is the science of market making. Okay, it's how the market is made. So we here are market makers. If at all, we would prefer to call ourselves, but yeah, I believe we are market makers because we are making the market. Okay, we know our turning points, our entry levels, our exit points. Like we know the dynamics of the markets inside and out. So we are market makers. Yeah, so, and this is market making. Okay, it's how we make a market. So we are making the market. We are market makers. So waiting for the day when all of you are good to go, and everybody goes their way happy, okay? And utilize this skill to create you wealth and a lot of fortune, okay? So right, so this candle, so I'm watching to see if this candle, now the next candle, creates fair value gap. Okay, watching to see if it creates a fair value gap. If it crosses above, leaving a gap here, that gap is the fair value gap, and it can also be another entry. Okay, targeting up here. So this is the final target. Why would you want to enter up here? Whereas we got our entries down here. Doesn't make sense. But as for now, let's make this market. Okay, let's keep on making this market. So immediately we hit here, we hit our external range liquidity. I cross my 100%, I mean the remaining 30%, and call it a day. So I'm watching this candle. I would love to see it create a fair value gap right here. If not, it could easily come back to this bullish order block, then launch higher. Okay, but as for now, love a fair value gap in here. So the candle closes in 2 minutes and 13 seconds right here. See this counter? This 5-minute candle closes in 2 minutes. Yeah, 2 minutes time. So if it closes, we will have some form of PDRA. Okay, when it closes. Yeah. So candle closes in 43 seconds, 42 seconds. Yeah. See what we have here. Now done. So we have a value gap. Inside what time? The silver bullet. So we can dive into this, then rally. So this partial entry into this fair value gap was an institutional order flow entry drill. So you can see we left the majority part of this fair value gap open. So this is IO Fed, institution order flow entry drill. Institution order flow entry drill. Okay, right here. So we have a bullish order block. We also have a value gap. So we can dip into this, then reach for our main objective happier. And as you can see, volatility is slowly fading away. And this is the nature of a day before NFP. Actually, any day before any major news event like FOMC, CPI, interest rates decision, NFP, yeah, such. A day prior usually have this kind of market environment. Actually, I would say that today is good because other days it's usually messy, where we have a seek destroy day, up and down, up and down. Sweep buy side liquidity, sweep sell side liquidity, sweep buy side liquidity, sweep sell side liquidity, and ends the day being indecisive candle. Yeah. So actually today is I would say it's a good day. And being a day prior to NFP, it's a good day. It's a good day. So we are nearing our external buy-side liquidity. And when we hit that, I close my 100% off the remaining 30%. That would make it 100% profit taken. Then can call it a day. Can end the session and call it a day. Overall, another profitable day. Right, so we are really near that buy side liquidity pool right here. So price will be attracted here like a magnet. You can see we would expect something like up. Then, yeah. How many pips? Just less than this is 30. 53. This high is at 30, 30, 32, almost like 2 pips, 2 pips away, 2 pips away. Then we call it a day. Actually now you can trail your stop loss from below here to up here. See above this your value gap, you have this candle. Okay. The middle point of this candle is at call it the mean threshold, 1.09133 right here. Okay, just below this candle, just below the middle point of this candle right here. You can trail your stop loss from now down here to up here. Okay, let's expect that final target to be hit. We call it a day. So trail your stop loss now from down here to up here, just below the middle point of this candle, the mean threshold of this candle right here, around here. Trail your stop loss there. Oh, don't understand why this candle is delaying the process, but we can dig into this, then major rally to this. But I would expect this to be hit first before this. So yeah, we can get a drop into this, then final rally into our target, then we call it a day. Call it a day. But when this time window closes, I'm also closing this session, and yeah, you can also close your profits. We were just 2 pips shy of this high, previous week high, but let's see, we drop here, then rally. But this is my final window of opportunity, 10 to 11, the silver bullet. Closing here, I also close my my trade, my profits, my charts, and call it a day, and can come back here tomorrow. Excuse me. Oh, so tomorrow is NFP. We don't trade on that day. Not trading. Actually, we have made enough for this week, so there's no need for giving it back to the markets. But we can tape read. Actually, we will tape read. We will tape read that NFP, but we will not be engaging. Yeah, just tape reading, no engagement. Yeah, yeah. So probably another institution order flow entry drill, because we just tapped into this high head of this fair value gap. Let's see a rally. So might be an institution order flow entry drill to give us this rally to our final target, and like that we close the day. So we have like 1 minute before this time window closes, which is silver bullet. So I hope the 1 minute gives us that final target, and we close everything together. We close the session, we close the session, we close the charts, we close the profits. Yeah. So because the market is falling shy of this previous week high, rally above these 2 equal highs up here, I can close like 20%, then leave 10% running. But let's just watch for the final final minute, because we are at the final minute right there. So let's see. All right, now the time we do the silver bullet is over. I would like to call this session over also, and you can close your profits. You can close your profits up here. And now the session is over. So today's session is over. We've gotten our entry down here. We've read this tip from down here all the way up to here. 70. So entry right here, stop loss below there. After we broke above here, trailed it to here, break above here, trailed our stop loss to here, rally higher, actually rally higher, stop loss here, another rally, stop loss here. And yeah, that was it for today, guys. And I hope you consumed everything I had to cover today. So I'm wishing you a good evening. Enjoy your evening, and let's meet again tomorrow. So tomorrow, being an NFP, you're not going to trade. You're just going to tape read. Okay. Yeah, and the session is over, guys. Session is over. You can send your questions to me right now, then we can discuss later for group. Okay. So send your questions, then we discuss. Then yeah, that's it. Close your profits. Close your profits. Call it a day. We meet again tomorrow. Institution order flow, rally. Another probable bullish order block, close above here. It's another order block for the final target happen. But yeah, the session is over. Close your profits, 100% close, then call it a day. We meet again tomorrow. I love you guys. Be safe.